Hi everyone, and welcome to the Hello House Monthly Investor Newsletter. My name's Sam, and this is the January 2023 edition. So, new year, new you, right? In this video, we're going to be breaking down where we're seeing the Australian property outlook for 2023, looking into some key data metrics, and also sharing with you our top locations for under 500,000, under a million, and under $2 million. Now, the whole purpose of this newsletter is to help you remove all that fear from the media, essentially, and give you a more of a boots on the ground knowledge of where we're seeing the property market from the eyes of a business that essentially is analysing and negotiating on property around Australia daily. So let's jump into it, shall we? The Australian property outlook, look, we'll see much of what we saw at the end of 2022, where that trend's going to continue with the reduced demand in housing expected. This is due to the lack of consumer confidence and available household cash flow. We refer to this as the post-New Year's hangover, where people are recovering from their Christmas and New Year spending habits, as well as adjusting back to the new normal after a number of weeks off. So you're just not going to get that big flurry of people wanting to invest or obviously to make those big life decisions like buying property. That's pretty persistent throughout the years in December, January as well. What will continue to keep a dampener on the property market is that inflation still remains relatively high, and potential interest rate rises are there throughout 2023, and they still dominate the investor's mind. So we believe that a coupling of these factors will continue to affect market sentiment and constrain property price growth in the early stages of 2023. It's also important to note here that in any market, there are markets within markets. So looking into your key asset selection is quite important if you are looking at purchasing at the moment. And obviously, it's a big part of what we do at Hello House. We have been analysing and negotiating some really great deals for our clients on the back end of 2022. And obviously, we're starting back up now in January. For us personally, in the market every day, we can see some great opportunities coming through. As the shoulder season that we're in, it's not going to last forever. Like, obviously, markets move in cycles, there's peaks and troughs. And look back 12 months ago, that boom time was was quite outrageous, where people were throwing $50,000 on top of someone else's bid just to secure the property. And now, obviously, it's been a little bit more suppressed and people are a bit uncertain. So we're going to continue to see those changes coming through. And I can see that as well at the back end of 2023, where we will be shifting out of this shoulder season into a more neutral market. And with that neutral market will become higher confidence levels from buyers. So then you'll start seeing that higher competition levels coming through, and with higher competition obviously can result in capital value increases as well. A final point to hit home on is our expectation for rent rises throughout 2023. With vacancy rates around Australia still at record lows, like sub 1%, low housing supply levels, and also the migration levels picking up. We have just seen 155,000 new migrants enter into Australia over the past 6 months. And what's that going to do? It's going to put further pressure on those rentals that are available at the moment. So with rent pressure, you'll start to see that shift in people's mindsets, and that's actually a leading indicator into capital appreciation, because renters, it starts to become so expensive that they tend to think, oh, well, I can become an owner-occupier if I'm paying this amount of money. And then they shift from renters to owners, and that also adds to that capital growth pressure on the back end. So that's what we're seeing for 2023. Looking at the key economic points of interest, look, interest rates, the cash rate still sits at 3.1%. The RBA does not meet in January, so we'll find a little bit more out in February. But I would say that if there are those future interest rate rises coming through, then that's going to continue dampening the Australian property market throughout 2023. I feel that they only have a few rises left, as I mentioned before. So let's just watch this space and keep monitoring it. The other key indicator is the inflation rate, and obviously we are still in that 6% range. So the government, they're targeting that 3%, so we need to get that down. Now, those two metrics are really important to keep an eye on throughout 2023. If we do see interest rates halt and inflation continue to come down, then I think we're going to be in for a nice end of 2023 from a capital growth perspective. Looking into auction clearance rates as well, look, it's still a neutral market from that perspective. It's sitting at 55.8%, so it's not a buyer's market, it's not a seller's market from where we're looking at. However, the buyer's level at the moment from our business, it's moderate, and the sellers are low to moderate. So I break this down a lot further in the newsletter, so please download it and have a read through. There's also some really interesting points to focus on when you are looking at property, what to really look for that's going to enhance your property's future capital growth potential, and also what to avoid. So if you are buying property, it's an expensive asset to buy and sell, so it's best to get it right. Jumping into the future growth locations now, and for suburbs under 500,000, we'll start there. I still really like Waikiki in Western Australia. It's in a really good geographical location. It's close to Perth. It's well built out, and it's near the coastline too. So you've got some nice flat blocks. There's the dwellings are around 10 to 20 years old in most locations, so you can have that renovation potential. There's also good subdivision potential there as well. And look, the median house price is sitting at 455,000 at the moment. So there's more information obviously in the newsletter, so jump in and have a look at that. Another location I like is Raceview in the Ipswich local government area in Queensland. Like the median house price is sitting at 490,000 at the moment, and the gross yields are 4.66%. So you can get decent returns on your investment from a cash flow perspective. But what I really like about Raceview is the infrastructure projects that are going through, which I talk about in the newsletter as well. Rounding out the 500,000 is Lavington. It's in the Albury local government area in New South Wales, and it's been a really strong performer and has actually fared quite well during 2022, and it's positioning itself quite well for future growth potential given its resilience throughout 2022 in that price bracket. Under $1 million now. Look, Pacific Pines on the Gold Coast. It's been on the radar for a while. It actually got a bit too crazy, and prices were going through the roof. It's actually showing some signs of good entry at the moment. So obviously with the December period and January period, it's quite hard to get into that market with a decent yield and a decent price point. And look, I really like that area, especially with all the infrastructure that's going through. So the median house price is sitting at 873,000 on that one, and you can still get a yield around 4.5%, which is above the average for Gold Coast, which generally sits at 4%. The second location under $1 million is Alexandra Hills. The locals call it Alex Hills, and look, it's similar to Pacific Pines, where it saw some really strong growth rates. People were climbing over themselves to get in there, and then just recently, in the past few months, it's come off the boil, and the fundamentals still are there for future growth potential. And to get into a good growth location in a somewhat suppressed market, I think it will perform quite well. And it's in the Redland Bay Shire, so it's just southeast of Brisbane and just north of the Gold Coast. So the ripple effect potential is really strong there as well. And obviously they've got the games coming and some really big infrastructure projects as well. The final location for under $1 million is East Maitland in the Newcastle local government area. I really like East Maitland. It's actually some beautiful countryside, and it's not too far from the coastline. And the ripple effect from the growth that we were seeing out of Newcastle is still quite strong. So there's a lot of infrastructure projects also going through in East Maitland. I mean, there's an M1 Pacific motorway upgrade that's got a spend of $2.1 billion. So have a look into that one as well. There's more information in the newsletter. Now, looking at the top suburbs under $2 million, the first one I've got here is Burleigh Waters in Queensland. So that's on the Gold Coast, and the Gold Coast is showing really strong signs of capital growth in our opinion. Obviously, there's a lot of infrastructure spend going through the Gold Coast. There's the light rail being pushed down from Broadbeach to Burleigh. It's been approved. They want to get it to the airport in Coolangatta before the Olympic Games start. You've also got the heavy rail being proposed down to the airport, and you've got a lot of M1 expansion going on at the moment. But overall, look, Burleigh Waters, it's a highly desirable location in southeast Queensland, and the median house price has pulled back a little bit since its peak, and it's very tightly held, the location. So the average hold period there is close to 12 years. So to find good quality assets in that location is quite rare, and given these suppressed markets, I feel like it's a great opportunity to jump into a really strong growth location that is going to perform well over the next 10 years. Quite similar is the second option in Oyster Bay, which is in the Sutherland Shire, New South Wales. So the old Shire. I used to live down in Cronulla back in the day, and look, it's a beautiful location. And Oyster Bay, it borders the Georges River there, so it can't be built out. Quite similar to Burleigh Waters in that it's come off its peak. It's still highly desirable, very tightly held, and I believe it will perform well over the next 10 years. And to get into a market like this is quite difficult at a decent purchase price range. So capitalising on the suppressed market is quite good. And there's obviously a lot of projects always going through in that Sutherland Shire to keep, I guess, people employed, and the diversity of employment is just is quite desirable there as well. The final location, rounding out the top three locations under $2 million, is Tweed Heads. Now, I spoke about this in the last monthly newsletter. I'm still quite bullish on it. Have a look through the information in the newsletter, but the key point about Tweed is to always check your flood mapping. But overall, it's a beautiful location. It is surrounded by rivers and coastline, so it's very, very hard to see that performing anything other than really well over the next 10 years. And also the median house price at 1.315 million at the moment. The bordering suburbs of Coolangatta, which is in Queensland to the north, and you go down to Kingscliff, Casuarina to the south. Look, their median house prices are a lot higher than that. You're looking at the $1.5 to $2 million range there. So the ripple effect potential here is strong. But everything else is, in the newsletter, I like to give a few little more tips and tricks. So download it. If you have any questions or feedback, please feel free to get in contact. Also, if you're looking at purchasing in 2023, feel free to check out our Get Buy Ready course. It distills over 28 years of property buying experience and over 3,000 transactions. So you don't know what you don't know, and what we've done is distilled all this information into an online course, perfect for adult learning in micro lessons, and it just tells you what to expect through each stage of the process, from find, analyze, negotiate, and transact. And it'll help you enter with more confidence into your property purchase. And obviously, if you do have any questions or you need any help, that's what we specialize in as well. So thanks very much for tuning in, and I'll see you next month.